Hello, fellow traders. Welcome back to this video. My name is Anthony, for those who don't know me. So if this is your first time to tune into this channel, feel welcomed. So in our channel, we basically talk about the SMC concept. If that is what has brought you to this channel, then I can tell you, uh, stay tuned, stick to the content, and always make sure at the end of every video, make sure you learn something from it. So welcome back, and without further ado, let's get tuned. So today is on Sunday, and as usual, you know very well, we do our top-down analysis on every Sunday to get ready for a new week. So as usual, we are going to start with the DXY. So we are going to start our analysis with the DXY. So I have some few pairs with me that I would like us to do analysis. Then we will be ready for a new week. So before I start my analysis, let me start by asking you, how was your week, by the way? So on my side, my week was a fantastic week. So this the week I've had a very beautiful week. So I've executed 3 trades, and the good thing, guys, is that all those trades were win. So to this week, I didn't have any loss, guys. So that is a good thing. So I don't want to tell you that that's how the every week is. No, there are those weeks that you expect losses. Other weeks you have wins. So remember, in trading, losses are inevitable, guys. If you hear any mentor telling you that my strategy is 100% win rate, then run, guys. Run, guys. Because I can tell you for sure, no strategy that is 100% has a win rate of 100%, guys. Losses are inevitable. I, if you have a strategy that is giving you a 40% win rate, then you are good to go, guys. You don't have to have a 70% win rate. You don't have to have 80% win rate. What matters is your risk management. So always, I emphasize always on the risk management. Make sure you know how to calculate your risk well, because that is what will determine whether you are going to stay on this uh, game or on this trading. Yeah, risk management. Always make sure you calculate your risk management well. So with all those few remarks, let me start. So we are on a DXY on a daily time frame. So guys, and if you have been following my analysis, you know very well that my analysis most of the time they play out. So we just look at the market, we analyze with what the market is telling us. Then we react to what the market is telling us, guys. Remember, trading is all about uh, reactive but not predictive. We don't have to predict what the market will do. Just react with what the market is telling you to do. And don't force setups, guys. If you analyze the market, then all of a sudden market does not respect your analysis, then you have to make peace with it, guys. It's not all the time when you analyze the market will respect the lines that you have drawn into the chart, those points of interest that you are marking on your chart. Market does not care, does not know whether you have drawn those lines on the chart, guys. So if the market plays on your favor, well and good. If it doesn't, then you have to move on, guys. Remember, always market is always right. You don't have to be right all the time. Are we together? Now, looking at the DXY on a daily time frame, last analysis, the analysis that we did last time, we saw very well that the market reacted off of this fair value gap. Can you see the low of this candle and the high of this candle here? You see, in between, there is a gap in between, and that is what you call a fair value gap. A gap between the 2 weeks of 3 consecutive candles. You see, the first candle and the third one. You count 1, 2, 3. If the wicks of those candles are not intersecting, If there is any gap in between, that is what we call a fair value gap. And you see very well, market came down to this fair value gap, then rejected off of that fair value gap. So I told you guys, we are expecting a bullish week. And you can see very clearly that the market was bullish. Are we together? Now today, what are we expecting? You can see very clearly here. You can see very clearly also, the market is rejecting off of this fair value gap. You can see very clearly we have a fair value gap here on a daily time frame. Can you see it? The week of this candle and the week of this candle are not intersecting. There is a gap in between. And you can see this Friday candle rejected, traded into this fair value gap and rejected off of it. So we are having a rejection on this fair value gap here. So now, if this fair value gap is strong enough to push the market, where will be the next target now? The next target will be this liquidity. We have two relative equal highs here. And then the other liquidity, it is this swing high that is there. So these are the target now. We are expecting the market to take out this liquidity and also this swing point liquidity. So that is my bias on the daily time frame on DXY. The market has reacted off of this fair value gap and it's rejecting off of that fair value gap. So if this fair value gap is strong enough, and how do we know that this fair value gap is strong enough? If we see the change of character off of this fair value gap now, that will be our confirmation that this fair value gap is strong enough to push the market to the upside and take out this liquidity high. And also we have this high here. Remember, the market will never get through here if it doesn't take out this liquidity. First of all, we need to see this high being taken out with a candle closing above this high. If we get that, be sure that the market will come and take out this high that you can see here. Now, if I can go to lower time frame, that is 4-hour time frame, you can see very clearly this is our fair value gap from the daily time frame. So this is the low of the candle that tapped into this fair value gap on the daily time frame, and you can see we are having rejection off of this. And in 4 hour we have another fair value gap here down here. We also have a fair value gap down here, but let us just focus on this one. Let me go to the lower time frame 1 hour and check whether we have any change of character. So here on this time frame we don't have any change of character. Let me go to 30 minutes time frame and see whether we have anything interesting. So still on 30 minutes, let me go to 15 and check what we have for 15 minutes time frame. So this is the last break of structure that I had here. This was the strong break of structure, guys, and you can see very clearly it had swept inducement down here before breaking this high. So this was a strong low. Now you can see the market came down here, reacted from this area. I think we have something like a demand zone from 5 minutes time frame, if I'm not wrong. Absolutely, guys. You can see very clearly if I mark with a line, we have a line there. You can see clearly we had a demand zone within this area. You see this 5 minutes demand zone, and that is where the market reacted off and pushed to the upside and hit our high at this point. Now that we know that is our strong low, we know this is our strong low. Let me delete this line. I need to have a clean chart. You know this is our strong low. This low like that. That is our strong low. And you can see the market. Did the market close below it? No. We don't have any close below this low. If the market closed here with a candle, then now you can say that this low was violated. But that one did not happen. So what am I expecting on the DXY? Since now, though this candle did sweep the high, not really, but now we have the sweep of this low and we have the sweep of this low. If the market will close above this high, because this is a strong high here, so this is what I will be waiting. If I have the candle close above this high or this high here, then I will wait for retracement, then get in. That is what I'm expecting on DXY. I'm expecting the candle to close above here. If I get that, then I wait for the retracement, then I join the buy. So what does that mean to the dollar pairs? That means I will be bearish on what? Euro USD, GBP USD. Now, going to my next pair, that is GBP USD, because that is a pair that is having a clean bias. So what have we concluded, guys? We have said we are bullish on DXY. That means we are supposed to be bearish on these dollar pairs. Now, if I can start from the daily time frame, maybe I can start from there and show those who have not been around. So in our previous analysis, what did we say? You can see on a higher time frame, that is daily time frame, we can see we are bearish. This is the last change of character. Market came to the extreme point of interest, and from there we have been trading to the downside. So this was the last break of structure. Can you see? This was our last break of structure. Market traded to a point of interest here. I think it was on 4-hour time frame. And then we said from here we are expecting to be bearish. Let me go to 4-hour time frame. So this is the break of structure that we are talking about. Market, was it there? It was here. This is the break of structure. Market reacted off of here, and it has been pushing to the downside. We have been pushing to the downside. So this is the last break of structure down here. So we said, since the market took out those inducement, market took out this liquidity high, and then reacted off of this fair value gap. Was it? It was last week. Came to this area here, although it did not tap to this supply zone here, but it reacted off of this fair value gap after taking out its inducement. Then from there we saw this change of character. I think on our last week analysis, we were expecting the the Euro USD, not Euro, but GBP USD to come to this extreme point of interest, but never came to this. I think it was 30 minutes order block, if I'm not wrong. Yeah. So market never came to this order block. But that one does not mean that our analysis was wrong, guys. Because you can see, this is what I told you guys here. I told you, I will only take this trade if the market will either come to this point of interest, or it will take out this high here, this liquidity high, because this is our minor inducement. If the market takes out this inducement, then it gives me a change of character. I will take that trade. But that one did not happen. So that means I didn't take any trade here, because market just came and left two equal highs here. So for me, that one acted as an inducement. I didn't want to take any trade from there, because that one is against my plan. And whenever market takes out external structure, I expect market to sweep liquidity before trading to the downside. So I like to respect and be disciplined and respect my trading rules. So I never took any trade here. You see, although market gave me a good change of character within this area, for me, I never took this trade because my plan said I need to see a sweep of liquidity, then a good change of character, then from there I could take the trade. Or the market, if the market came to this extreme, then I would have taken that trade. But you can see that the market did what we were expecting it to do, guys. And the idea was we were expecting the market to be what? To be bearish. And the whole of that week, you can see very clearly the market has been bearish. So on Friday, we had CPI news. And I always tell you guys, the best way to trade news is don't trade, guys. There are good days that you can trade. But when we have this news, please don't execute the trade. If you want to take the trade, just take the trade after the news. Don't take towards the news, not unless you trade from the higher time frame. If you are seeing trader, well and good. If you execute your trade from either 4-hour time frame and above, there is no problem, because and on those higher time frame, these news will not have much impact. Now you can see clearly here we had a break of structure down here. We had a break of structure. You can see here we have a break of structure. But now on this push to the downside, we never had any inducement being swept. So, and you can see very clearly on Wednesday, on Friday's CPI news, market came to this extreme supply zone. We have this extreme supply zone at this area. Market came to that extreme 1 hour order block and pushed to the downside. So now what am I watching and what am I looking for on this time frame? On this pair, that is, I have this one. I have this demand zone here that remember this low is a strong low. Why am I saying this low is a strong low? I'm expecting to see a reaction from this low because you can see here we had an inducement being swept. Market pushed to the downside and closed below here. Then later on, pushed ahead and changed the character here. So this low, it's a very strong low and we are expecting to see a reaction once the market comes to this area. So if I have to take a trade here, then this will be my target. Now going to the 30 minutes time frame, because that is where I've marked this supply zone. You can see here we have another break of structure, and this break of structure is a valid and a strong break of structure since has swept all this liquidity here. We can see here we had some kind of trend line liquidity. If you look at here very clearly, you can see we had some kind of trend line liquidity, and the market swept all that liquidity before pushing to the downside and break this low. So now this is my setup on the GU. Although here we don't have liquidity here being formed, but if the market will come here, then I will maybe look for a change of character from the lower time frame, that is from the either 3 or 5 minutes time frame, and then I will take my trade to the downside. If you have to take an aggressive entry, you place your entry from here. The stop loss should be above there. Then where will be your target? The target should be this low. Or maybe you can reduce this one a little bit for you to get at least 1:3. But if you have to take this aggressive entry, make sure your target will be at this area because we are expecting to see a reaction from here. Now let me look. I don't have a clean setup on EURUSD. Guys, this is the trade that we took with my Telegram community. This is the trade that I shared this setup before it happened. This is one of the trades that we took last week on the EURUSD. This was 1:4.7 for risk to reward. Market, you can see guys, market came and reacted off of this demand zone here. And from here, it pushed and violated this. That's why, guys, I normally advise you at least stick to 1:3 risk to reward. If the market gives you 1:3 risk to reward, make sure you take some partials. Make sure you take some partials because for me, my first target was 1:3, and the next target I targeted this supply zone down here. I targeted this supply zone down here. Then, so this trade alone gave me like almost 7 hours because I risked 2%, 1%. I closed my target at 1:3. The next one came to 1:4 on a Euro USD. So it was a very beautiful trade on Euro USD. Now let me go to the higher time frame. Going to the daily time frame. So Euro USD, guys, it's looking to be bullish. It's bullish. No, let me not say that it's looking. It is bullish. From what you can see here, you can see very clearly this is the last break of structure, and I'm having an open demand zone here. We are having this extreme demand zone here on a daily time frame. So I'm still hoping that this pair will come to this point of interest, although we have an inverse fair value gap here. So this inverse fair value gap here might push the market up, So On last week's analysis, we are expecting the DXY, not DX, sorry, Euro USD to come to this extreme supply zone that is being, how do we call it? This extreme demand zone, supply zone that we marked here. I think it was from either 1 hour or 4 hour time frame. We look at that. Yeah, it is the word that I was looking for. It is refined supply zone here. But if we look at the daily time frame, this is our demand zone, the supply zone, and the market came to this supply zone. You see this order block, sorry, the last buy before the sell. If I mark the low, you can see the market tapped into that daily order block, and from there it reacted from there. So my anticipation is that we are expecting the Euro USD to come and take out this low. So I'm still expecting the Euro USD to come and take out this low before, yeah, to take out this low and maybe come to this demand zone for starting to push to the upside, because I expect to see reaction from this demand zone. This is a very strong order block. This is a very strong order block or demand zone. The swept inducement before pushing to break the high here. Now, from what I can see here, you can see very clearly we had this fair value gap that we also have seen on DXY. We have the low of this candle and the high of this candle. In between, we have what? We have a fair value gap, and I can see the Euro USD is rejecting off of this fair value gap. So this candle here acts as our order block, and I think I refined it from the low time frame. I think it was 4 hour time frame. Very good, very nice. You can see here from the 4 hour time frame, we have this order block here. And you can see the market is reacting off of that order block, which had a fair value gap in between. We have a fair value gap. Remember, our buyers here, we are bearish, and we have those two relative equal lows here, which is liquidity. So I'm still expecting the Euro USD to be bearish this coming week and come and take out this low. But if we have a good change of character here, where will be our first target? The target will be here, this low. Remember, this low should be your first target. Don't target this low here. Remember, here we also have demand zone. Although this order block is not strong because never swept liquidity here. So I'm expecting this demand zone to be violated. So the analysis is, if we get a good change of character here, then we'll take that sell targeting this low down here. If I can go to 15 minutes, do I have any change of character? Not really. I don't have any good change of character, but in terms of internal structure, this is the last break of structure here. Do you have a break of structure here really? Yeah, this is the last break of structure. This is the last strong break of structure, because you can see swept an inducement down here, swept this low. We have an inducement being cleared. Then after that, we saw this break of structure. So this low is a strong low. So what am I expecting? I'm expecting this low to be taken out. Because this is my strong low. If this low gets to be taken out, then I will look for a retracement. Then I take my sell targeting the low that I've shown you. So for me, the Euro USD is not that clear, but compared to GBP USD. So this is what I'm watching on the Euro USD. If this law gets to be violated, then I will wait for retracement. Then I will take my sell, targeting this. Targeting this law. This will be my first target. Then the next target will be this law down there. So that is it on my Euro USD. Let me look at the GBPJPY. Let me look at the GBPJPY. But before that, let me look at the Euro GBPJPY because I have something there. Remember here, guys, last time, if you remember very clearly on our previous analysis, what did I say? I told you guys, I will not, from what I can see here, we had this support zone, this resistance turning to support zone. You see, we saw this market was reacting off of this support zone. We say the first rejection here, we had a second rejection, then we had a third rejection. Although now seeing here, we can see very clearly we are very bullish. Although here we have a gap here, we had a gap here, but now I was very skeptical for this sell here since the market was reacting from the support zone. So I told you to be very careful when we are taking the trade from here. Wait for a change of character before taking any trade. Although the market reacted from this area because this high was a strong high, guys. And I told you guys here how to mark this point of view, how to know whether a point of interest is strong or not. So I told you this strong high was a strong high, and we were expecting the market to react. If I'm not wrong, we had marked an order block on 3-hour time frame. Yeah, this is our order block here. And the market came, when the market opened on Monday, market came to this order block, reacted off of that order block. It had some push to the downside, and I'm very sure if someone took a trade from here, at least you could have got something like 1:3 before this reversal. But then the market gave us a change of character. Market gave us a change of character. And from what I can see, the market is coming to this swing high. From what I can see, the market is coming to this swing high now. So my bias on last time, I told you, since the market was rejecting off of the support zone, we might have a bullish week. And you can see very clearly the week was bullish. Market reacted off this support zone and gave us a change of character from here. After getting this change of character, guys, I was expecting you to look for buys. Don't look for sells because that is a signal that the market gave us for us to start looking for what? Starting looking for buys. Though, for me, after I saw this change of character, so remember, whenever market takes out the external liquidity, we are expecting market to take out at least one of the internal structures before pushing to the upside. So I was expecting the market at least, because if we look here, we have this low, we have this low, and this low. So, and I saw this order block here on 30 minutes time frame. So I was expecting the market to come to this order block here on the 30 minutes time frame for me to start looking for a buy. But even the market did not sweep even this liquidity. So that means what? I did not execute. Although the market reacted from this order block here on the 30 minutes time frame, but I didn't take that trade because that is against my plan, guys. Are we together? So I'm not expecting the market to come to this order block now. So what I will do, I will just follow the trend and follow what the market is doing. So I think on Friday, I had a setup here, but the market never came to my point of interest. I had this break of structure here on the 15 minutes time frame. We had a sweep of liquidity and a break of structure. Then I saw this fake BOS here. We have a fake break of structure here. Then this low now, I knew this low will be act as an inducement. I was expecting at least the market to come to this order block. And I think I had also refined it on 5 minutes time frame. Yeah, I had refined it on 5 minutes time frame like this. I don't know what is wrong. Yeah, I had refined it like this. So I was expecting the market to come to here and then take my buy from here. But unfortunately, market had other plans, never came to my point of interest, just swept this low and pushed to the upside. So from what I can see now, because now I can say this break of structure here, if you look, we have a break of structure. So this break of structure is a strong one since swept liquidity. Let me just push it like this. So this low here swept inducement. We had a sweep of liquidity. We had a liquidation, sweep liquidity before breaking the structure at this point. We have a break of structure here. So now we had a new structure, and that's why you can see market never came down here. What did the market do? Came to this order block and reacted off of this order block. Reacted from here and pushed to the upside and broke the structure. So currently, I don't have any setup here on Euro JPY, but if the Euro JPY will come down to this area, this is where I will take my buy from, and targeting what? This high. But from what I can see here, I don't think whether the Euro USD will come, Euro JPY will come here before taking out this liquidity. So going to GBP JPY. GBP JPY currently, I think this analysis is contradicting things out. So I had a I had a trade here on the GBP JPY, by the way, guys, on Friday. This is I had another beautiful trade here on GBP JPY. So I took a buy from this order block. And if you have been watching my videos and if you have been following me very clearly, you can see very clearly my strategy is always the same. I always look at the same thing, guys. Don't contradict things. Don't change your strategy. Yes, respect your strategy and make sure you follow your rules. First of all, I always follow the trend. Then I look for the same things every time. I need to see a sweep of liquidity. Then after that, a break of structure or a change of character. And you can see we have a change of break of structure here. The next thing that I should ask myself, where is liquidity? You can see very clearly we had a minor inducement here. So this was my liquidity. Then I had this point of interest that was resting below here. That is my demand zone. So I knew very well now the market should come and take out this inducement. Then the market came exactly as I was anticipating. Have you noticed, guys, that we are having some glitch with the trading view? I don't know what is wrong with the trading view. Sorry, that is it. So where is my stop? My stop loss was below this low here. And where was my target? My target was this high. So that is where I placed my target. 1:3 raised to 1. And you can see within 30 minutes, the top first 15 minutes, the second 15 minutes candle, we were out of the trade. And that's how I managed to bank my 1:3 risk to reward. Now, from what I can see here on GBPJPY, it is already giving me a change of character. It is giving us a change of character because this low was a strong low. And we have this high swept liquidity above here. And you can see we have a change of character. So I can refine this one on 15 minutes time frame to this order block. But now remember here, I think this is the same thing that we're having on GU, the same setup. But now, what I will do, I will not take an extreme aggressive entry from here. I won't take aggressive entry from here. I'll wait for a change of character. Because this one, remember here we had equal highs, equal lows. We had a liquidity pool that was resting here. We had this low and this lows here. So the market maybe it was coming to sweep all that liquidity before continuing to push to the upside. So for me, and I know very clearly we are very bullish here. So I don't want to take a sell now because if I looked at the 4-hour time frame, I can see very clearly we are very much bullish. So I think this kind of sell is a trap. This sell here is a trap. So until I see another change of character here, I won't take that sell because I'm expecting the market to come and take out this high. Although now, if we get, maybe if the market will tap there and give us a second and give us a break of structure, that is when I will be interested on taking the sell. If I don't get another break of strategy here, I won't take that trade. So for the GBPJPY, guys, don't take aggressive entry. Wait for a change of character before taking an aggressive entry. So guys, that is it, guys. Thank you for watching this video. Thank you very much. I hope you have learned something from this top-down analysis video. If you have liked the video, please don't forget to like. Don't forget also to leave the comment. On Wednesday, I always drop another video. So which area do you want me to look to tackle on Wednesday? You can drop your comment there. You can ask me any question, provided it's trading related. I always reply your text, guys. So thank you for watching. Until next time, it's a bye-bye for now.